What's going on, everyone? Welcome to the video. This is going to be an educational recap on Apple using supply and demand. I'll show you exactly how I drew out the zone on the 3-month, 1-day time frame. And then after we look at the bigger picture, we'll go over to the 30-minute and I'll show you how you could have taken shorts from supply, targeting demand, and then how you could have taken longs from demand, targeting supply. So to start off here in the larger time frame, we can see this area of liquidity being built up. Buyers and sellers are agreeing on price. And then, like I've said in the past, instead of focusing on a large zone with this big cluster of candles, this is a little bit inaccurate. You want to be waiting for price to make a big move in one way or the other, leaving behind that supply or demand. And then whichever side price goes, you want to be focusing on that last candle that establishes that zone. So from this point, simply the high and close of this candle before the large move down establishes our area of supply. And when price gets back into this range, we want to see sellers step into the market and push price lower. Now, this is a very valid zone due to the large move after that liquidity buildup going to the downside. So in a situation like this, I would like to be playing shorts on that first touch because we know when price gets back into this area, there's going to be some unfilled orders waiting to get filled. And it's also important to know if you're doing analysis and you're drawing supply and demand zones in larger time frames, the levels are going to be a little bit more wide, obviously because you're on a larger time. So it's important that you don't play weeklies and you buy a little bit more time on your contracts so you can give the play some flexibility and some room to breathe. If you're playing weeklies and price kind of consolidates within this range, you might get chopped out or you might lose a lot of premium. And if you buy a little bit more time, you can protect yourself and you can give the play some time to materialize. So this is what I saw in the daily time frame. This was the supply zone, and I wanted to see price get back into this area, and I wanted to see those sell orders get filled and move price lower. So that's the daily look. Now looking at the 30-minute time frame, this is our area demand. We have price move higher, and then we have this 30-minute consolidation candle. It was simply the open at 143.89 to the low at 142.37. From this point right here, we have a nice 30-minute breakout to the upside, and price continues higher into supply. As price comes back down, we use this area of support, and if you're taking shorts from supply, this is going to be your sell target going to the downside. So I always say you want to plan your trade and then trade your plan. I found the zone on the daily time frame, the supply zone, and then when you're taking shorts from supply, your targets are going to be that 30-minute demand. So when I took shorts up here in this range, I bought a little bit more time on my contracts because if you're someone who likes to only play weeklies, you might get stopped out in this range, especially since you're on a daily supply zone and there's a little bit more room for your play since the zone is a little bit bigger. You want to make sure you're buying a little bit more time so you don't get stopped out and so you don't make emotional decisions on that initial chop right at the supply line. So I entered the play right here with about 2 to 3 weeks time, and even though price was consolidating within this range, I wasn't losing a lot of premium and I wasn't stressed because I knew where my stop was going to be and I knew where my thesis was going to be wrong. So it's most important to establish your plan before you enter the trade. You want to know where your entry is going to be, you want to know where your stop loss is going to be, and you want to know what your sell targets are going to be. If you don't do this before you enter the trade, you're simply gambling, and you will see a huge change in your trading if you establish a plan before you enter. So again, I get in right here. We consolidate a little bit. I'm not stressed at all because I know where my risk is and I have a little bit more time and I'm protecting myself from the volatility that weekly options have. So we start to make a move lower. These nice 30-minute candle prints give us nice premium going to the downside. And the first initial target is going to be that opening range low at 145.74 and then also the lower pivot at 145.76. So at this point, the premiums are up about 60 to 70%. I'm looking to take off most of my position down here because going into the following session, we have CPI and we obviously have no idea what's going to happen. So to protect ourselves and to minimize risk, we want to take off most of the position into this range. And already at this point, this is a great trade. So taking off 60 to 70% here, and then I wanted to swing only runners for a chance for price to get back into demand. So this is how you want to approach the trade. You want to take shorts from the area supply. You want to target that lower end of demand. And this was my plan going into this trade. So as you can see from CPI, the numbers were negative. We opened right near this bottom end of the demand zone. We come down, and if I look at a 1-minute time frame, you can see how accurate the zone was. So let's take a look at that. Let me go to a 5-day 1 minute so we can see that exact area. Let me pull back here to CPI. So I take off most of my position into end of day. As we can see here, the contracts were up about 60 to 70%. And then the following session after CPI in the morning, we open right within this range, and you can see how accurate this bottom end of demand is. So I look to take off my shorts right here in this 142.37. The contracts are up about 170 to 180% in this range, and then this is where you really want to be looking to exit, as we are inside of the bottom of demand, and this is where price can rebound and make a nice move higher. So we can see that happening. This was a great short from supply targeting demand, and then you even could have taken longs from demand targeting supply. So again, the following session, we come back down. If you're getting long in this 143.89 range, your risk is simply anything below that 142.37, and you know what your risk is before you enter the trade. So this was a great long going back into supply. I personally did not take this. I took the short from supply targeting demand, but even this move right here was about 170% on those swing runners, and I think it's super important that I go over this for educational purposes so you guys learn how to spot these zones on the higher time frame and how you can change your approach. So with that said, that's going to be all for this video. I just wanted to do a quick recap on this example on Apple because I thought it was a really good one. Thank you for listening. If you guys enjoy the content, please like and subscribe to our channel. Also leave a comment down below, and I will see you guys in the next video.